Hello everyone. The prices of gold and silver has been very volatile during last few days. Gold and silver price had a huge run during last 2025. Prices of gold actually appreciated about 65% last year, whereas silver appreciated 145%. And this year, since the beginning of 2026, gold prices have gone up again another 8%, whereas prices of silver has gone up about 16% higher. But during last Friday, suddenly there's a big sell-off regarding this the prices of gold and silver. So why is so much of volatility in the gold and silver market? We'd like to analyze that. On Friday, President Trump nominated Kevin Warsh as his candidate, as current President Jerome Powell is going to retire in the month of May this year. Friday, the future spot prices of gold fell, intraday fell about 10%. Finally, it settled at 5% down. Similarly, silver price fell about 16%, unheard of on a day. It fell down this much and finally settled at 6%. So nominee Kevin Warsh is supposed to be a inflation hawk and is a strong dollar. He supports strong dollar. As a result of which, so far people are buying gold because of heavy inflation and during 2025 or the fear of inflation, various geopolitical events. People are buying gold as a hedge, and also because of currency debasement, because of this other, like, BRIC countries, BRIC meaning Brazil, Russia, India, and China, those big countries, they are trying to actually use their own currencies in terms of settling their trades on against the US dollar. US dollar is currently the fiat currency in which all these international trades, people are using the dollar. So it is very powerful. But right now, because of various reasons, the Ukraine war or other reasons, the other countries, they don't feel very comfortable having everything is using the fiat currency for their settlement. So they are started having this bilateral their own currencies in terms of using dual currencies to do settlement. As a result of which the US dollar has been weakening. Currently, the dollar, the exchange rate against major currencies, it has reached a 4 months low. And so people were buying gold as a hedge against currency fluctuation. And on top of that, all the central bank throughout the globe, they are buying more and more gold. And also US government certain policies that they cannot predict, what they might say one thing one day, another thing another day, or they were been, there are incidents that they are freezing assets for other countries. So as a result of which the other countries basically like trying to have more and more as a gold as a hedge in case, and bringing their gold to their own native places, so that in case of any kind of issues happen, their assets get basically their assets are frozen and they cannot use it. Currency settlement or buying trades in terms of payments, they are having enough gold in their reserves. So that's why, people wants to have more and more gold. So there has been a lot of demand, and then there's only limited amount of gold that has been mined every year. So the prices of gold has been going up more and more. And it is also some of the analysts today, I heard JP Morgan, one of the analysts saying that price of gold per ounce this year at the end of 2026 might reach $6,300 per ounce. 6,300 at the end of 2026 for 1 ounce of gold. 1 ounce is about 23 grams of gold. So that would have about over 20% appreciation from current price of gold as of today. Due to so much volatility, also in this, CME, Chicago Mercantile Exchange, this is the main exchange for trading futures market of gold. They have increased these margin requirements. CME on Friday, they actually increased the margin amounts for gold from 6% to 8%. And for silver, the margin requirement has been increased from 11% to 15%. Futures trading is done with this, it's a leverage position. You can buy, you can trade using margins. What that means is that they set up certain amount of margin requirement based on the position you want to trade. And then if you make, like if the future market, if the price appreciates, you get your money will be deposited to the bank. But if the price of gold or silver goes against it, then you have to bring money to fill up to this margin amount and put it in your account. Or if you're unable to, if the sudden volatility, and if you cannot meet those margin requirements, your position will be like sold out. So since this margin amount has been increased, so many of these futures traders, they will not be able to trade as much because of this higher margin requirements. So there could there's various reasons, basically like why this on this Friday the market had a huge sell off. It was a very like people had concentrated positions, so there was a lot of short coverage. People took profit taking. They had huge amount of profit they had. So on Friday, when this big scare happened after this President Trump's nomination of Federal Reserve, people started dumping those precious metals. The reason of silver is somewhat different. Silver is also not as used as much for hedging, but it has other lot of industrial uses. The silver is used. Say for example, silver is used for creating solar panel equipments, or some other electric vehicles, other industrial or medicines, or creating jewelries. It is used very much. Countries like India, there are very big amount of silver uses. They have it as they basically during the holidays and festival time, they need a lot of silver. So seems like as long as this the inflation basically stays higher, or the U.S. dollar considers to be weaker, people will continue to buy gold. I think seems like for this the year in 2026, gold might still have a good run. Just like this analyst in JP Morgan said, it could reach up to $6,300 per ounce. So if you manage your portfolio, you could probably consider keeping some gold and silver as a part of your portfolio. But again, I am not a financial advisor, so please do your due diligence and do your research, and have a proper position. If you want to invest in gold and silver, it's already higher, but the yield of gold and silver last year, it has done a lot better than many other very high flying stocks. Gold and silver has given higher returns. So if you have good returns or some amount of hedging in your portfolio, it might do well in your portfolio.
What percentage of my financial assets, what percentage of my portfolio should I have in gold? And think about that percentage. And then if the price goes up and down, if it goes up too much, you sell out to get back to that number, it goes down too much. But to keep a certain percentage, because it's a very effective diversifier to.
So that's what I think. So in the meantime, if you like this video, could you please hit a like button and subscribe my channel. I'd appreciate that. Thank you very much. So right after that,